Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Steve Curtis, who's the CEO of Caledonia Mining, who are a profitable, cash-generated gold producer with a strong growth profile, with primary asset being their Blanket mine in Zimbabwe. They are listed on both the New York and London stock exchanges with the symbol CMCL. Steve's an accountant by background with over 30 years experience and has been in mining for over 15 of those years, and has been head of the company since 2014. So he's on the podcast today to give us an overview of Caledonia Mining and what exciting things they've been up to and what the future holds for them. So that's welcome Steve to the podcast. How you doing, Steve?
Very good. Thank you, Rob. Nice to talk to you.
And yourself. So wondered if you can give our audience a little bit of background about yourself, obviously prior to coming into mining, and what you have been doing in the mining industry. So I suppose a bit of a snapshot of your career.
Sure. Rob, as you correctly say, I've been in mining for 15 odd years, and all of that time has been with Caledonia Mining. I'm an accountant by profession, and joined Caledonia Mining in 2006 as the CFO, just at the time that Caledonia had secured the deal to buy the Blanket mine. Prior to that, I was a finance director for a company called Avery Dennison, which was in the paper industry, specialized paper industry. And I spent 3 or 4 years doing that because the company that I was managing director of prior to that was in a similar industry, and that was a German family business that was bought out by Avery Dennison, which is the largest player in that sector. So I've been in the space of finance my whole career, and it was very interesting to make a big step change out of sort of manufacturing into mining, which is very, very different. But I joined Caledonia, which was a very exciting business at that point, and it was really just doing exploration. And it had no successful operating assets, and the Blanket mine had always been a successful operating asset, and I was quite keen to have a complete sort of career change. So I joined the mining sector. I was also interested to learn that the Blanket mine was in Zimbabwe, and I was born in Zimbabwe, educated in Zimbabwe, and then did my tertiary education in Cape Town in South Africa. So Zimbabwe has always had a very soft spot for me. And when I had the opportunity to embark on a new career in an area that, in a country that I knew well, that was very exciting. I've been very happy with the move. It's been a great operation. I've loved working in Zimbabwe with the Zimbabweans. And so spent from 2006 to 2014 as CFO. And then in 2014, I took over as CEO. And I've been doing that now for 7 years, and been through a very exciting time with Caledonia in Zim, through hyperinflation, through finishing off some good work that Kinross Mine had started, and then most recently over the last sort of 6 years, the big project that I'm sure we'll talk about later, which is the Central Shaft. And it's been a fantastic journey. And what's most important is Caledonia is an interesting business that has been able to attract some very, very good people. So I'm not a miner. I don't pretend to be a miner. But we have got world-class miners who do the technical end of our business. And that has made me comfortable as a non-miner to be able to work in this environment. And the training as an accountant has stood me in very good stead, because Zimbabwe, for all its recent past, has had a topsy-turvy time with currencies, inflation, lack of foreign currency, and we've had to run the business really on the basis of cash. And I've always said cash flow statement is the most meaningful statement that we produce as accountants, and that's proven. And as we talk about the project, you'll see that cash has enabled us to actually complete a very, very big and successful project. Yeah, so I've had a varied career, loving what I'm doing at the moment, enjoying being in the gold space. It's an exciting time in the gold space, and still enjoying working in Zimbabwe, despite the fact that it is difficult, but very exciting times with Caledonia.
Yes, certainly. Wondered if you can give our audience an overview of Caledonia Mining, just so we understand a little bit more about the company, and then obviously we can go on and speak about the project.
Right. Caledonia Mining Corporation is a Jersey registered company, Jersey, Channel Islands. And the reason we registered there is it's very beneficial to shareholders from a dividend paying perspective. People who've known us for some time will remember us as a Canadian company, but we migrated from Canada to Jersey because a portion of our dividend receivers, our shareholders, had some rather disadvantageous tax consequences because we were paying a dividend from a Canadian company. So we moved across to Jersey. So we have a small office in Jersey. CFO is based there with our general counsel. And then we've got the operational office in Johannesburg, which has got the technical people, the accounting people, and the procurement people. It's a small office, only 12 to 14 people there. And then we have got a couple of senior people, business development, and our investor relations people in London, because as you rightly say, we listed on the AIM market, and that was the first listing we had. More recently, we moved across to the NYSE, which has become our dominant market. So we've got a presence in Jersey, in London, in South Africa, and then of course the operation in just outside of a little town called Gwanda in Zimbabwe, about 150 km south of Bulawayo, which is the second largest city, and about 190 kilometers north of the border with South Africa, on the main tarred road thoroughfare between South Africa through Gwanda up to Bulawayo and then up to Harare. So that's who we are. We've only got the one operating asset at the moment, and that's the Blanket Mine. Through the history of Caledonia, we've owned numerous other projects and properties. Those we transitioned out of those where they were not very successful mining operations, not great exploration projects, and we trimmed ourselves down when we got the Blanket Mine. And we focused and dedicated ourselves to making the Blanket Mine a very successful operation, which I think we can proudly say we've done. More recently, December of last year, we announced that we have acquired options over 2 exploration properties in Zimbabwe. We firmly believe that Zimbabwe is one of the last gold frontiers in a very amenable part of the world, although it's got a number of economic problems. From a geological perspective, it's a great location. And we've always said that once we finished the central shaft and we started to ramp up production, we needed to increase our portfolio. And so that's what we're doing. We weren't looking to buy large operations already in existence, because more often than not, for a business like ours, that could be too much to bite off. We've got money in the treasury, but we often consider it prudent to spend the money building something new rather than spending the money fixing what maybe somebody else hasn't done quite how we would have liked to have done it. So we're looking at these brownfield operations. We're doing some exploration on them at the moment, and we'll make a decision in the next 6 to 9 months as to whether we want to exercise the options and then embark on more extensive evaluation to see if we can develop another mining operation and diversify away from just being a single asset gold producer in Zimbabwe. Our focus is to stay in gold. So we're not looking at other minerals or base metals or anything like that. We want to stay in gold. And, you know, we want to get over the hurdles, and the first hurdle will be the 100,000 ounces a year, so that you attract a different class of investor. You can get on the radar of different people, and then hopefully, you know, be able to bring you know, the next blanket online and build that up, and, you know, slowly increase the portfolio and become a producer of hopefully a couple of 100,000 ounces a year, and do that successfully in a country like Zimbabwe, which for us has got a great labor force, which is dying out for employment opportunity, and it has got an environment that needs miners, needs exporters, and we have found it an amenable environment, although on a day-to-day basis it can be very challenging. But investors are welcomed. You need to know what you're doing. So we want to build a bigger portfolio of assets. We have announced recently that if we don't find really what we're looking for in Zimbabwe, we're happy to look elsewhere as well. What we're trying to illustrate is we're determined to be a larger gold producer. And Caledonia has been a dividend payer to its shareholders since about 2014. And that's important to us. It's important for us to return cash to shareholders. The Blanket Mine is a very cash generative, very successful operation. And, you know, shareholders have been patient while we did the shaft expansion for the last 6 years. And our intention has always been to reward shareholders with a good dividend stream. And we've done that successfully over the last 5 quarters. We've been paying since 2014, but over the last 5 quarters, we've increased our dividend by 1 cent per share each quarter. So from a stable position that ended in sort of 2019, October 2019, to where we are today, we've increased our dividend by about 75%. And our intention is to continue to stay on people's radars by being a good dividend payer.
Yeah. Before we speak about mining in Zimbabwe, obviously I want to focus on your project, so the Central Shaft. Obviously, it's been a big infrastructure project for the company. Now it's operational. What benefits has this brought to the mine and to the company?
Well, what it's going to do is really transformational. First thing, it enables us to access mineralized ore bodies below the lowest level that we had access to before. We could mine down to 750 meters with the previous infrastructure. This new shaft goes down to 1,200 meters. The old shaft was the only shaft. So we had a single shaft operation, and that was for materials, ore, and it was a very much smaller shaft with smaller capacity than what the new central shaft is going to do. From a physical location point of view, the old shaft was sort of right on the sort of the northern extreme. The new central shaft, just by its name, is centrally located in the strike length. We mine 5 or 6 distinctive ore bodies across about a 3-kilometer strike length, near vertical ore bodies. And we are now positioned with a central shaft kind of in the middle of that 3-kilometer range. So we can mine to the north and to the south. We're going to add 3 more development levels, going from 750 meters downwards. And the intention is probably in a number of years, and probably 5 years plus, to consider adding a 4th level, but accessing that via declines, not extending the shaft. So the shaft has got much more capacity from a hoisting point of view than the old shaft. It is a 4-compartment shaft, so it can take men, materials, and ore, and then a ballast weight. Just for example, you know, the old method of lowering the men down into the mine, we had a double cage system that took 14 men at a time, and that lowered them down to a certain level. They had to get out, and then they had to transit across to another area and then lower themselves further. And as I said, that was in the extreme north. If they were working on the other side of the mine, they then had to travel 3 kilometers on foot with their equipment to get there. And, you know, that journey could take a miner 2 hours to get from being at the shaft head down to his working space, 2 hours to get into work. Now, the new shaft, we've got a double cage system there as well, but we will lower 80 men at a time into the mine. So the efficiencies are going to be dramatic, and they're going to be halfway to their working faces on a single pass right down to where they need to be, into the guts of the mine. So there are many, many benefits from being able to have this new shaft working. We can also use this much bigger shaft at 6-meter diameter to put bigger pieces of machinery down into the mine. And Dana Roots, who is our COO, has introduced quite a lot of trackless equipment. And we've got LHDs, loading systems there, dump trucks, drill rigs, and all of that sort of stuff, which has got to get into the mine. It was very difficult through the old 4 shaft. The new shaft is going to make it much more difficult and efficient to get pieces of equipment down into the shaft. So it really is transformational. We'll have a situation where the shaft's capacity, which will be over 3,000 tons a day, is matching now the CIL capacity, which is about 3,500 tons a day. And that was built during Kinross's time. And we've just added a new mill into the crushing and the milling section that brings those tonnages up to about 2,200, 2,300 tons a day. So if there's anywhere we need a little bit more capacity, it's in the milling section, but you can add mills easily, and it's inexpensive. And then we're going to have a very nicely balanced operation, from a hoisting to a crushing and milling perspective to a CIL perspective, that can do 3,000 tons a day. Now, our target for 2022 is 80,000 ounces a day. Our achieved for 2020 was about 58,000 ounces. This year, our guidance is 61 to 67,000 ounces. And then 2022 is 80,000 ounces. And at current mine planning rates, 80,000 ounces is looking just sort of north of 2,300 tons a day. And as I've said, we've got capacity for 3,000 tons a day. So we've put the infrastructure in to see Blanket mine well into the future. And for those who don't know, Blanket has been mining gold for 110 years. And, you know, we are very confident that as we go deeper, Blanket will be mining gold for many, many years to come. And the infrastructure we've put in place is going to last this operation very well for decades to come. So it's a very important project for us.
Yeah. Obviously, you mentioned you've increased the sort of mineral resource and mineral reserves at Blanket Mine. Is this something we can expect to see more of in the future? And obviously, new levels at the mine?
Yes, absolutely. I already said that the mineralized ore bodies that we mine are near vertical. And to explore those successfully, you've got to get down to depth. And then you've got to be able to create drill cubbies by doing some development work and then drilling back into the ore bodies to get decent intersections. Now, the central shaft does two things for us. It gets us deeper. So we can get down below the 750 meter level, and we can position ourselves for exploration. The other thing it does is it brings along more capacity. And one of the biggest constraints that we had on what is our fore shaft, which was the only operational shaft we had, it had a defined capacity of hoisting. And that hoisting had to cater for development waste, be run of mine waste, and mineralized ore. So you had to have a very fine balance. And what we suffered with really over the last sort of 12 to 18 months is that we had to sacrifice some of the development work, exploration development work, creating the cubbies, because we just hadn't had the capacity on the shaft to bring all that waste rock out of the mine. So our exploration programs have been slower. Now that we're deeper and we've got both shafts running, we have got all the capacity we need to move material out of the mine, both ore and development waste and exploration waste. So yes, we are now getting back into the swing of planning out a deep level exploration program, so that we can improve our confidence and our knowledge about the ore bodies that are deeper and lower in the mine that will be accessed by those new 3 levels. So yes, exploration is a slowish process, but we will be able to now have no limitation as to what we can work on. And then obviously the results of that will result in new reserve and resource statements, which at the moment we've got a life of mine taking us out to about 2034. But we are going to be depleting that at 80,000 ounces a year, and our exploration program needs to replace that and or even add to it. So yeah, we're excited about the fact we can get back into the swing of doing more exploration and securing the future of the mine with more reserve and resource information.
Yeah, certainly. You're going to be moving to renewable energy sources, and you've commissioned a solar project that will support the power delivered to the mine. How is this project progressing? And are there any changes you're making for a more sustainable operation?
Solar is absolutely the right thing for us to be doing from an environmentally conscious and a sustainability point of view. It also is very necessary in the Southern African region, which is generally short of power. So that is Zimbabwe, it's Zambia, it's South Africa. We are all power constrained. So we wanted to become more independent of national grids. And this is more of a strategic project than it is a cost-saving project, but very important from a strategic point of view. So at the moment, Blanket has got grid power supplied by the Zimbabwe Electricity Supply Agency, and we've also got 18 megawatts of diesel generator power. Now that works very well for us, and it's been a lifesaver quite often. But burning diesel to generate 18 megawatts of power, you can imagine what that is. That's not really what we want to do. it's expensive from a procurement perspective for the diesel, and it's not environmentally friendly. So we will put in the 12 megawatt solar farm, and that is a project that is going full steam ahead at the moment, probably destined to be operational round about March, April of next year. We've appointed an EPC contractor, a company called Voltalia, and they are in full motion in purchasing the long lead time items. And I can tell you, the pandemic and the shutdown of various industries has made it quite a challenge to get the necessary solar panels and to get them into a place like Zimbabwe. But we've procured, we've signed the supply agreements, so we're secure. We're going to get what we need. There'll be some shipping logistic delays which is part of the plan, and we will then be going full steam ahead and commissioning this project. Now, 12 megawatts is not. It provides the base load for the mining business. And at this stage, we're not going for any storage capacity. So it's 12 megawatts during daylight hours. The economics for us at this point in time made battery storage too expensive. So we're going for 12 megawatts because we know we can consume all of that 12 megawatts during daylight hours. We have got the option, obviously, to increase the capacity of the solar farm up to sort of match the diesel generator, which would be 18 megawatts. And then we will have to work out how we store the excess that will be generated when we're not running at peak demand. And there are mechanisms to do that in Zimbabwe, so we are very confident that we'll be able to do that. But we just want to bed down the core of the solar project. Then we can go and talk to people about we're a genuine producer of solar power, and we want to expand, but we need to sign some sort of a banking arrangement where we can store some of the excess power that we generate. So that's exciting for us. We're very excited about our solar project, and we're getting enormous support from the authorities in Zimbabwe. They're very keen for us to develop a project like this, because, as I said, Zimbabwe is short of power, South Africa is short of power. So anybody who can become more self-sufficient is getting assistance. We're getting assistance in terms of preferential duty structures to bring the equipment into Zimbabwe. We're getting all the necessary licenses we need. So, it's a very pragmatic approach taken by the authorities. And you will have seen that South Africa has also recognized the fact that they need to get into partnerships with producers to produce alternative power sources, not just coal-fired power stations. So Southern Africa is waking up to this green energy wave, and we're excited to be part of that at the forefront. And we'll continue to look at opportunities to optimize our business, be more and more environmentally friendly. We're very focused on the ESG aspects of running a mine. We're very cognizant of our responsibilities to communities and our stakeholders, including our staff, who are an important asset. And the Blanket staff are actually 10% shareholders in the Blanket mine through their own trust. The local community is a 10% shareholder in the Blanket mine, and the government sovereign wealth fund is a 16% shareholder. So we recognize the responsibility towards the communities and the environment in which we operate by being a very serious player in communities and working hand in glove with everyone who makes our business successful. So yeah, we're very ESG focused. We're very focused on the solar farm, and we want to apply best standards to the blanket operation.
Yeah, exciting stuff. I wondered if you can give us an overview of mining in Zimbabwe. Obviously, you've mentioned there's probably been a lot of political, economic issues over the numerous years. I wonder if you can just tell us what it is like mining in Zimbabwe now. Also, you mentioned at the beginning in the introduction about hyperinflation. How did the company navigate its way through that? So yeah, I just wanted to give us an overview of mining in Zimbabwe.
Sure. Hyperinflation was a big issue in really prior to 2009. The fact I'm sitting here talking to you shows that we managed to navigate our way through hyperinflation. An industry like ours, which produces an internationally accepted product and gets paid in proper currency, can manage its way through those difficulties. It's always been a bigger issue for our staff because they live in a had lived in a hyperinflationary environment. Caledonia was kind of insulated because we produced gold, we sold gold for dollars, and those dollars, as the inflation was running away with itself, just became more and more and more valuable. So we don't need to delve much into hyperinflation. It was a period in time. We weathered the storm, and Blanket, because of its quality, came out on the right side of that. The economy has struggled to recover from hyperinflation, and it destroyed a lot of confidence, and it destroyed a lot of businesses, manufacturing businesses. The government is very, very supportive of getting industries back up and running. The agricultural sector is so important to Zimbabwe, and it's suffered from a number of years of droughts. Luckily, the last year was a fantastic rainy season. So food production has been at record levels. Tobacco production has been at record levels. So that's good for the economy. It provides jobs and it provides good income streams. So the environment has been very hard hit by hyperinflation, by a lack of confidence, and then COVID came along, and that battered an already struggling economy. The important thing from a mining perspective is we're 100% exporters. So we generate a large proportion of the nation's foreign currency reserves are generated by the mining sector. And the country needs miners to do better. And the country can only have miners doing better if there is investment by the mining community. And that's been one of the biggest stumbling blocks, that we all know Zimbabwe is very prospective, but it hasn't been classified as a primary investment environment because of things like a lack of foreign currency. So people get nervous about putting a dollar into an environment when that dollar is going to be consumed in many, many ways just because there aren't enough dollar exporters. So we get an enormous amount of support to invest in our business. And that's why we invested over a 5-6 year period. We invested nearly $70 million in this new shaft to be able to increase productive capacity and therefore generate more dollar revenue. And we got all the support we needed. And the beauty of it was that the $70 million that we invested was all generated by the Blanket mine, because investment dollars really weren't available for the Zimbabwe sector from outside of the country. Excuse me. But because we were self-funding, we could embark on a well thought out investment strategy, and we could execute using our own money And with the help of the government and the authorities, with the necessary permissions and whatever, we were able to complete this project. Now, there are many people who would like to do projects, but if they haven't got the wherewithal in the country, they are still finding it very difficult to raise funding from outside. Now, that's one of the biggest things that the government will need to attend to make investors comfortable and confident that investing $1 in Zimbabwe will attract a certain risk rating, and therefore there has to be a certain return. And once those parameters balance each other out, I think Zimbabwe will attract some investment flows, which will reap very good benefits for the country. So it is a tough environment, but there's a very good labor component in Zimbabwe. One of the better educated nations in Southern Africa. So you've got a great work ethic. You've got, unfortunately, a very high unemployment rate in the official channels. So you've got lots of good people looking for jobs. So you've got very good loyalty and very low staff turnovers. It is a good place to do business. It is not far from South Africa, and it can tap into the supply systems and the logistics systems of South Africa. So that, as I said, we're 190 k's north of the border between South Africa and Zimbabwe, and we truck an enormous amount of material and consumables up to Blanket to feed the Blanket mine. And that all works very well because the infrastructure in Zimbabwe still works. The roads are good. The bridge networks are fine. So, all of that does support an industry. But there are some policies that are considered not particularly investor friendly. There is a dire shortage of foreign currency. So the dollar generated by us has got to work very, very hard to be able to supply the other imported necessities like pharmaceuticals, which have to be imported. And the pharmaceutical distributor in Zimbabwe, he's selling them locally. So he needs dollars to buy his supplies to sell locally, but he doesn't generate any more dollars to go and buy the next batch. So those are the challenges. Again, gold mining and platinum mining and chrome mining, we are able to run our businesses because we produce and we sell internationally, and we get paid international prices. But there's still a shortage of currency, and we have to sell our part of our currency that we generate. We have to sell back to the government because they need it. They need it to run the rest of the economy. And if you don't understand it, that can be very scary for outside investors. So those are the challenges Zimbabwe suffers from. And those are some of the challenges that we suffer from. We would prefer, to be honest, a fully dollarized free market system. But at this stage in the cycle of Zimbabwe, that's not possible. So we work with the rules that are put in front of us, and we can work with them. So it's tough, but it's very doable.
Yeah. Obviously, you mentioned about some of the exploration work that you're doing. I wonder if you can give us an update on those exploration options that you've acquired.
Yeah, sure. There are two at the moment that we signed up in December of last year. The first one is called Glen Hume. They are both pretty much in the middle of the country, as the crow flies, maybe 60 k's away from each other. In the sort of the Gweru area of Zimbabwe on the greenstone belt, so it's gold territory. Brownfields operations. The Glen Hume operation is more advanced from an exploration perspective than the other one, which is called Connemara North. So we are drilling at Glen Hume. And as and when we get results, we will announce those to the market. We haven't announced anything yet because The project had a slower startup than we would have liked. We had an exceptional rainy season, and that made getting drill rigs into the right places virtually impossible. But we're in full swing now. So Glen Hume is progressing. That project, we need to make a decision about exercising the option sort of in Q1 of next year. So we will be getting to the end of the exploration program in the next couple of months. We will then be doing the evaluation of what it's telling us. And if there is something of a size that we are excited about, we'll exercise the option, which would then which would cost us then $2.5 million. And we would be the 100% owner of that property. And we could then embark on the concept of building a new project. And that would be an open cast mine, not an underground mine like Blanket is. So it'd be an open cast operation. The other project, which is Connemara North, again in the similar sort of geographic area, we are still in the phase of building the geological model based on the information that we have at hand. And once we have developed that geological model, and that's from learnings that we took out of the Glen Hume project, we will be able to plan a exploration program and then embark on a drilling program, probably to a lesser extent than what had to take place at Glen Hume, because there's more old data that is available for Connemara. And we probably got an extra 3 months on the Connemara project to make the decision as to whether we exercise or not. And if we find something that we believe is suitable and worth taking a chance on, then we would need to exercise that option at a price of $5 million. And then we could take that forward. We've got pretty clear hurdles in our own minds as to, we wouldn't get excited if we did a resource definition and we found 100,000 ounces. That's not going to warrant putting time and effort into building a new operation. We would need something bigger than that. But we're not on those properties. I think it would be naive to think that we're looking for millions and millions of ounces. Those aren't the sort of properties. So they're going to be smallish, but they still need to add value to Caledonia shareholders in terms of NPV and free cash flow for them to cut the mustard from our investment criteria. So yeah, within the next 12 months, we have to have completed the exploration programs, completed the evaluations, and come to a decision as to whether we progress them, if they're worth progressing, or unfortunately, like exploration properties that people hear about all the time, if it doesn't meet the mark, you shut it down and you walk away and you find the next one. Exploration is high risk, and there are more failures than there are successes. But we will do professional evaluation, and we'll tell the market what our conclusions are when we have that info.
Yeah. I've got a couple more questions. There's been numerous legislation changes by the Zimbabwean government directed at gold mining. How have they been impacting your operations?
I'm assuming what you're talking about is sort of the positive incentive programs that government has put in place just recently.
Yes,
and those incentive programs have been put in place to try and address the subject that I was talking about earlier about the lack of foreign currency and the fact that we have to sell a proportion, and at the moment it's 40% of our dollar revenue streams. We have to sell back to the government for local currency. So we're left with 60% dollars. Now, the incentive schemes that the authorities have put in place will enable Blanket to access anything between 80% and 100% US dollar revenues on incremental volumes. Now, there are various structures to do that. If you've got incremental volume, you can immediately move up to an 80% dollar retention on your incremental gold sales. There are two other mechanisms. There is a new US dollar denominated stock exchange that is being opened in a new economic zone at Victoria Falls. And the government is encouraging businesses that can list to list on that exchange. And if you list on that exchange, which is purely dollar denominated, not like the old Zimbabwe stock exchange, then you can access 100% US dollar retention on your incremental proceeds. Now, what it means is that if we got 80% on our incremental volumes, then the overall package would mean that we would go from 60% US dollar, 40% Zimbabwe dollar on our revenue streams, up to about 66, 67% because of our incremental. And remembering, I'm saying we're going from 58,000 to somewhere between 61 and 67, and then up to 80,000. So we've got the incremental business coming forward. Again, good for Blanket. So if we went just for the 80% revenue retention on incrementals, that would move us, as I say, from 60% dollar retention up to 66, 67%. If we go, let's say the Victoria Stock Exchange mechanism, which gives you 100%, then we could get about 72% US dollar retention on the total revenue stream. Now that's becoming very attractive. And what it also allows us is to directly export our incremental gold volumes. Now, at the moment, we sell all of our gold to the national refinery, and they export it all, they sell it, they get the money back, and they pay us. The new mechanism is to encourage incremental production. Number one, we can do that. Number two, gives you a higher dollar retention. We look forward to that. And number three, it allows you to become a gold exporter in your own right again, which enables us to build up a reputation with international refineries and create routes to market, which again, strategically is very important for us. So the authorities are making these structures available to the gold mining sector, but the 80% and the 100% is also available to other exporters. It's to generate interest in people becoming dollar revenue generators by improving and expanding their export businesses. What it does for gold is that additional thing of being allowed to export your gold yourself and opening up routes to market and building reputations with international refineries. And obviously, if you've exported a proportion of your own gold and you are collecting and selling, you're selling it into the international market and collecting the dollars yourself, we would have a better opportunity to be able to raise international funding, because lenders would then say, you've got control over the whole stream. If I lend you money, I can see that you've got the dollars outside of the country that you can pay me back. So it's definitely a move in the right direction by the authorities to recognize that if you want to attract foreign investors, you've got to make yourself as appealing as anybody, any other country, and any other investor who is looking at South Africa or Zambia or Mali or Cote d'Ivoire. They have got the ability to attract outside dollars because the borrower can pay back to the lender. At the moment, there's a question mark. You don't control your dollars because you sell to the national refinery. He's got your money and he has to pay you back. Then your money's in Zimbabwe, and only then can you consider paying us. That becomes too complicated a route for some investors, and they just say, too complicated. The authorities have recognized it, they've heard us, and now they're saying, sell your gold outside yourselves if you produce more, generate your dollars, talk to your funders, get bigger and better funding, and let's become part of the wider world. So I'm taking them as very positive steps. We are evaluating which ones we will access, and we will access some or all of them, primarily because Blanket is going to expand its gold production. So we would be negligent if we didn't take all the hard work done on the new shaft that's going to generate more gold production, and we didn't leverage that to the best. So we're excited about this next stage. And these are available right now. So we are working on them right now, figuring out what all the modalities are. And, we're ready to get off to the races on this one.
Yeah. As a conclusion, I just wanted to give us a brief overview of the next 12 to 18 months.
Okay, so, last time I looked, we were in July, and it's come frighteningly fast. We need to continue to protect ourselves from the pandemic. We're isolated 15 kilometers out of Gwanda, but Zimbabwe has got limited resources to fight the pandemic. So vaccination programs are taking place, but there's not the level of coverage and vaccination success that other places have had. So we've got to continue to protect our people, which will therefore protect our business from the pandemic. We need to do the first step of the ramp up from 58,000 ounces to somewhere in the mid 60,000 ounces. That's the first step of mining more. Blanket has never produced gold at that level. So there are things that we've got to learn. Everything has got to be done at best standards, very strict safety conditions. But we've got new capacity. We can put in the right systems and the right mining plan to mine more gold. So first stage is we've got to get to that sort of mid 60,000 ounce gold production this year safely. Critical. We've got to get the solar farm bedded down, which there'll be announcements about that. Then we actually need to hit the mining and processing rate to achieve 80,000 ounces. We need to hit that rate towards the back end of this year. So we can't only start thinking about it in January or February, because we need to be doing the 2,200, 2,300 tons a day on a consistent basis for the 12 months. Otherwise, that 80,000 ounce target is going to be hard. So we're pushing ourselves hard to get to that level before the end of the year. And those announcements will come out in our normal quarterly reporting, the MD&As and things like that. So we've had the end of our second quarter. We'll be putting out a production update quite soon to tell the market how successful the second quarter was. We didn't have a great first quarter by our own standards. So we'll be announcing how the second quarter has gone. And then we've got more dividend announcements that come out every quarter. We pay a dividend every quarter. So there'll be another one coming out actually any day now, early July, payable at the end of July. And then it's going to be announcements around the exploration programs and potentially any new exploration programs that we identify, because we continue to look for other opportunities. We've always had a package, a target package that we are interested in Zimbabwe. Some are more complicated from an ownership structure, so they've taken us longer to kind of unbundle. So hopefully we can actually progress some of those, which we'll then be able to announce to the market and continue to demonstrate our commitment to building our portfolio and moving away from just a single asset. So yeah, so for us, it's build production, control your costs, maintain your safety levels without debate, manage that foreign currency risk, get cash into the right hands and the right places, pay the Caledonia dividend, and then ramp up that production to get to the 80,000 ounce, and sustain that while we are building a pipeline of new exploration opportunities. So yeah, we're in and running in July. December will be with us before we can blink, and it's going to be as busy a year as we've ever had. And you can never take your eye off the ball with this dreaded pandemic hanging over you all the time. And we're having to be very, very careful. But so far, so good. And, long may that last.
Yeah. Really appreciate your time, Steve, and give us an overview and update on Caledonia Mining. There's certainly a lot of challenges ahead. It seems you've got everything under control, so which is good. If our audience wants to reach out to you, if they've got any questions about obviously Caledonia Mining or even mining in Zimbabwe, how can they go about doing that? Are you on any social media platforms?
Yeah, well, we've got an email address, info@caledoniamining.com, which is the bucket that collects any general requests without targeting an individual. That will always get answered. We do use Twitter, so we tweet and we disseminate information that way. People know where we are because really we're a single operation. We're listed. We don't try and hide. You can't hide. Please use the either the Twitter or the info@caledoniamining.com, and we'll happily try and answer questions to the best of our ability.
Yeah, we'll include those in the show notes accompanying this podcast. So if people want to reach out to you, they have that in the show notes. Really appreciate your time, Steve. Hope the audience has enjoyed this episode, learning a little bit more about mining in Zimbabwe, and especially with Caledonia Mining and what they've achieved today and what they're looking to do in the future. So appreciate if you can share this episode with friends, family, other people in the mining industry, so they get the benefit of listening to what Steve has said about mining in Zimbabwe, and especially with Caledonia Mining. So appreciate you for listening. Keep sharing and liking this podcast. We want to get this podcast and particularly this episode out to everywhere around the world. So appreciate your continued support. So until next time, happy mining.